think China is a very interesting question. We do think that they will be able to hit their 5% growth target this year. And the recent step up in fiscal stimulus is of significance because I think it is a signal from Beijing that the central government is now willing to use its own balance sheet to support growth, even as it continues to push forward with the deleveraging effort. So in our view, we are in a policy-heavy window at this point in time. So the upcoming Central Economic Work Conference, as well as the third plenum, we'll be watching out for signals, clearer guidance on needed reforms, on more permanent solutions to the local government finances, as well as punchier support for the property developers. So our sense is near term, in the next 6 months, we could probably see about a 10% upside in the Chinese market, led very much by, we think, the macroeconomic recovery beneficiaries, as well as the higher cash flow generative, high dividend yielding stocks, because we want to take advantage of the continued low interest rate environment in China.
10% upside. So do we, as investors, despite the balance of risks, get in now, especially since valuations are still looking quite compelling?
Yeah, that's our view. We do think that the market has derated so sharply that the balance of risk reward actually favors adding investment into China at this point in time. Indeed, that's the view that we have on China. Yeah.
It's interesting that while the entire China narrative has been given the knockback, we've seen these other markets, the counter narrative to China, the China plus one strategic partnership countries, India, Vietnam, Indonesia, perform quite strongly. Mm-hmm. Do you still want to own those areas?
Absolutely. I mean, our sense is this, in the next 5 to 10 years, the focus on national security, geopolitics will continue to redirect capital flows and reshuffle supply chains across the region. And therefore, there will be a continued focus on investment alternatives outside of China as China undergoes its own economic transition. So in that regards, actually, thematically, we find a couple of pretty interesting and compelling opportunities. One is in the consumer space. I think the consumer segment in India, in ASEAN, holds a lot of promise. The other one is being invested via the leading banks in India, in Indonesia, the Philippines, simply because that's a proxy to structural growth. And at the same time, as well, as you mentioned, Sri, the China Plus strategy, that is going to continue. And certainly some of the older economy sectors in the ASEAN countries, and even industrial REITs, for example, in Singapore, those will be key focus. And by markets, I think two will continue to be in focus. One is India. It's increasingly seen as the essential market of the future and the key counterweight to China. And I would say that to be fair to China, to India as well, it is now actually enjoying the payoffs from years of comprehensive reforms since at least 2016. And the other one is Japan. It is in a positive inflation loop. And at the same time, we are seeing this heavy regulatory push to lift return on equity, which should help unlock performance in the value sectors, especially the large banks.